Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news the drive to fix farming, especially livestock farming, might be igniting a new and potentially dangerous round of food price increases, dangerous especially for the poor. But first, the Western-backed Asian Development Bank has been funding projects in China, even though China has built its own development bank, the Asian Infrastructure Investment Bank. Now the ADB is saying time is up on these projects and is moving to end what has become a charade by China. China's Belt and Road projects now top $1 billion in investment. China is claiming a big increase in foreign investment in July, but there are reasons to be sceptical. Markets are. Those markets expect a 10 basis point trimming of both their 1-year and 5-year prime loan rates when they are reviewed later today. It says a lot if China is cutting rates while the rest of the world is raising them. And the Chinese government 10-year bond yield is now near its 20-year low. Also low is the flow of the Yangtze River, and that now is critical. It seems it'll be at least a month yet before any relief is likely. The implications for some regions and cities are rather grim. And Japan's inflation rate rose to 2.6% in July from 2.4% the prior month. This was the 11th straight month of increase in consumer prices and the fastest pace since April 2014. In the US, it's the heart of their summer holidays, and all eyes are now turning to the central bank shindig at Jackson Hole, Wyoming. The US dollar has resumed its rally, and yields on US Treasury bonds have risen as markets come to realise they can't beat the Fed, and that interest rates will keep on rising until inflation is beaten, even if that means enduring a recession. This makes the power signals at Jackson Hole all that more interesting. And it does raise the question of whether any sort of soft landing can be achieved through this process. Across the US and Canada, assessors are out this coming week looking at corn and soybean crops. Yield is the one thing satellite imagery can't assess, so the results of these annual tours are crucial in working how much grain is to come to market. We should also note that cattle prices have hit all-time record highs in New Zealand recently. What is unusual is that this record is coming 3 months earlier than the usual October seasonal rise. Lamb prices are rising too, and they're out of season as well, but they aren't yet at record levels, even if they are very close. Meanwhile, carbon prices are on the rise again after having flatlined for the past 6 months. The EU carbon price is also rising again, up to €96 a tonne. It is hard to escape the sense that these prices are just getting started. One consequence will be that livestock and grain prices are about to follow them sharply higher as land is converted from food production to forests. Only the wealthy will be able to keep up, sadly. The US Treasury 10-year yield starts today at 2.97% and up 9 basis points from this time Friday and up 15 basis points from this time last week. And the price of gold will open today at $1,748 an ounce, which is up $3 from this time Saturday, but down $54 for the week. And oil prices start today at just on $89.50 a barrel in the US, while international Brent price is now just under $95.50 a barrel. These levels are little changed. And the Kiwi dollar will open today at 61.7 US cents, which is almost 1 cent lower than this time on Friday. A week ago it was 64.5 US cents, though the weekly devaluation is 4.3%. Against the Australian dollar, we're also lower at 89.8 Australian cents, and against the euro, we've fallen to 61.5 euro cents. That's also a half a cent drop. That all means our trade weight index starts today at just on 70.8. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston.